Presented by OCBC Securities, your partner in global trading.
Emily and I were talking a little bit earlier about a slew of Chinese companies under the microscope here. Yesterday, organic farming company Chowda Modern Agriculture dove something like 25% on tabloid reports here in Hong Kong that the company denied that they were lying about the size of their land bank, their actual agricultural bank. Now, since the start of the year, the Shanghai Composite is down 2.5%. The Shenzhen market taking the brunt of it, down 13%. You would think it might be a ripe time to tiptoe back into the tulip field and pick up cheap stocks. But amid all these clouds overhanging a lot of these companies on governance and accounting issues, yes or no? Philip Chen, director from Shenwan Securities, joins Arjuna and myself at this juncture of the show. Philip,
hey.
Welcome.
Good morning.
You know the headlines. I mean, Real Gold, you know, is having issues. Long Top. Earlier in the week, that was a bit of a scandal. This company had a multinational auditor, Deloitte Touche Tohmatsu, quit, and then Chowda was in Jimmy Lai's Next magazine. It's kind of scary, you know, even though stocks are pretty cheap at this point.
That's right. But I think you know, for some of these companies, particularly one you mentioned, Chowda. I mean, there has been a lot of sort of rumor about this company for quite some time. I mean, it listed well over 10 years ago.
Yeah.
But the thing is, there's always been with the change in auditors, with the with the continued cash raisings, it's just been a question mark over question mark, and so that's the reason. One of the reasons why it stayed at a very low valuation, even though it seems to have compelling fundamentals.
But is one of the reasons that this market, and this market, I mean, you know, the China stock market is completely out of favor right now, realistically speaking.
Yeah.
Is the reason for that really, you know, worries about, you know, the macroeconomics and the inflation busting and all that, or is it, you know, what is perceived as an increasing number of companies that aren't coming clean?
I think it's no. I think generally this is one issue which has just popped up. I mean, as a headline over the last couple of weeks. But the thing is, the main thing is that liquidity has picked up. But as you say, China is still out of favor because of the fundamentals. The slowing of the economy, and actually the slowing of the economy has been coming, but it's just that people have not really been factoring it in as soon as they should, because all the focus at the beginning of the year was the developed world.
Okay, Philip, let me bring Arjuna into this conversation, because he and I brought this up a little bit earlier.
Yeah.
Hi, Philip. You heard this interesting case of the China Agritech, this company in which Carlyle Capital and other luminaries had invested, and there was all these apocryphal stories about analysts from the United States being wheeled in to see fictitious factories. They took them to fertilizer plants, which actually were being run by other companies, but purported to be run by Agritech, and they were systematically sort of goofing all these analysts into pretending they were something that they weren't. Now, do you think that this could perhaps be pervasive in terms of some of these companies that are trying to list on the NASDAQ and on foreign stock exchanges? And how much damage would that do? And perhaps should foreign analysts such as myself be more careful in the way we actually analyze some of these Chinese firms?
I think you always have to be careful with Chinese firms. This is not the first time we've had scandals like this from Chinese companies. This is being on and off for, we've had scandals like this over the last 15 years, and they just blow up every few years. So I think that you've just got to be diligent and not sort of like be taken with the, with certain industries. Of course, they look sexy once they come on, and there's very little coverage of them. So of course they can actually attract a lot of investor interest without very serious analysis.
Philip, against that backdrop, what do we do? What's your prescription for how to play the market? Do you do it through Hong Kong? Do you do it through H-shares, where presumably you're supposed to have more transparency and better reporting standards, or what? So what do you do in the B-share market? What do you do in the A-share market if you've got a Q fee allotment and H-shares?
Well, for the China space, we think that the Asia market will probably pick up sooner than the Hong Kong market. I mean, China shares in Hong Kong, given that they've fallen off more recently. But we think that in terms of the fundamentals, the economy is going to start picking up again in the third to fourth quarter. We think that also expectations on inflation will, dissipate towards the end of the third quarter. So that's when stocks will start to pick up. When you look at the particular sectors to focus on, then we would look at those ones which have been heavily regulated, for instance, and like, for instance, steel, aluminium, right, in China.
Phil, thanks for your coming in. Doctor, all right? Have a great weekend. Philip Chen, Shenwan Securities, and Arjuna continues with us, not for just this hour, but into the next hour from HSBC Private Bank as our guest host. Boy, we're really milking Arjuna there. You better pour him another cup of espresso, Karen.
Yes, that's better than paying those private investment fees. It's good to have the free advice. We're coming up to the start of trade in Seoul City in Tokyo. Let's get a preview. Carrie is taking a look at the Japanese market. Carrie.